22-year-olds typically are not looking at money the way you are, and they're certainly not focused on trying to build wealth. You know, they're focused on getting rich. I mean, I don't think there's a 20-year-old out there that doesn't want to be rich, but they don't understand the difference between rich and wealthy. What's going on, everybody? Chris Naugle back at it with the Money School podcast, where we teach you how to take back control of your money, but not just how to take back control of your money. How about things like how to get all the money back for every car you buy, drive, and own? You know what? There's so many things that we teach, but what we don't do a good job of is getting young folks that need to learn about money before it's too late, before they get sucked into the traditional system. And then all of a sudden they blink, they're 40, 50, 60 years old saying, oh my gosh, I wish I would have known about that. Well, that's what we're going to do today. I've got Mr. Carson Herlean on here at a whopping 22 years old, but he is crushing it. He's been with us over at the BYOB factory. I guess you'll call it that way, but be your own. And he's been talking to our students. He's been talking to our clients. He's been building his own real estate empire. And he's also been doing a bunch of surfing over there at Trussell. So we're going to cover the whole gamut. We're going to cover the whole gamut on how he got into being his own bank. Welcome to the show, Carson.
Thank you so much, Chris. I appreciate you being here in that intro. I actually want to start by just thanking you. Like, you don't understand, I don't think you do, at least how much of an impact you've made on me and my career and journey. It's been amazing. I don't think I'd be where I'm at today without you. I know I wouldn't be. And so I'm just really grateful to be here and be able to talk to you and share with everyone else what I love about working with you and what I've learned from you.
I love it, man. Thanks so much for that. You know, the only thing I ask is the next time I'm out in California, you take me out surfing, and not on one of those foam boards like I had to surf last time. I was down in Trussell's on a really nice day on a foam board. I felt like a
no way.
Water.
Like a kook. That's awesome.
No,
we've been going a lot.
The main lineup was right here. I like paddled way down there. I'm like, I don't want anyone to see me on this foam board.
Nope. That's awesome. No.
Anyway. But so let's just get into the story. I mean, you know, 22-year-olds typically are not looking at money the way you are, and they're certainly not focused on trying to build wealth. You know, they're focused on getting rich. I mean, I don't think there's a 20-year-old out there that doesn't want to be rich, but they don't understand the difference between rich and wealthy. And what you're doing is a completely different ball game than what most, kids, guys, gals your age are doing out there. So like, what was the shift for you? Why did you decide to go this path?
Well, I think it all came down to my surroundings and my environment. Lucky enough, being young, my brain is not down a traditional path like everyone else is. I'm not 30 years into going to working 9 to 5, working for other people. I'm young enough where I can take in all these different ideas and expand and grow off of it. And so at a young age, sitting around the dinner table with my dad, he'd pull out a whiteboard and say, hey, here's how much I spend every single month just to live here. I don't remember what the total was. It was like 20 grand a month or something, just for his minimal expenses. And he was like, you guys don't understand what money really is, how much things cost. And that right there, when I was, I think, 15 or 16 around the dinner table, made me start thinking about money, made me start thinking about how much things cost and how am I going to build this for my family in the future. And that's where it all started. And I think it came one step at a time when I actually went and served a church mission for a year where I lived abroad. And I did that in 2020. And when I came home, I was like, okay, well, I need to learn about real estate. That's what I felt that all rich people were doing was real estate. So that's what I was asking around. Hey, do you guys know people who in real estate? How can I learn about real estate? And I got connected with a guy named Justin Colby, which I know you have met with and had a podcast with him recently. And another one of my mentors, he showed me the ropes of how to fix and flip a home, how you can burr a house, why you'd want to do that, how to raise money. I just started watching these people start doing real estate. And I was like, oh, well, I'll go do a couple deals. I'll learn how this works. And then I got introduced to other people like you, talking about infinite banking, talking about controlling and unlocking your money. And I come from the self-directed IRA space because that's what my dad was in. isn't. He teaches people how to self-direct their funds. And so I understood self-directing your retirement accounts. Now I'm learning about controlling your non-qualified money, learning about how to buy real estate. And it just took over my mind, I think. I was at school. I went to school, even though I was learning about all these things. I was in school and I was looking at all my peers and going to classes. And I realized, well, okay, I could continue going down the so-called, rat race type of idea, or I could continue to learn about entrepreneurship, control over your money, and wealth building. And I had these two ideas fighting against one another, pulling apart the tension between myself, my heart, where I wanted to go. And I came to a point where I had to decide, what route do I want to go down? And it was that choice of dropping out of school and pursuing something bigger than just the income game, but building the wealth game and starting early. That changed everything for me. I went all in and I said, all right, this is how I'm going to do things. This is what I'm going to learn. Here's how I'm going to build our foundation. And I just did it. And we're 3 years past that, and I haven't looked back. And it's been the most amazing experience. I've learned the most I probably could have ever learned in the past 3 years compared to 3 years in school. And I'm just so grateful for what I've learned thus far, but hoping to continue to learn more and build off of what I have.
So let's just pretend that you had gone down the traditional college path. Where would you be? Would you have graduated from school by now? Would you be a senior? Like, where would you be in that path if you would continue the traditional college path that most kids your age would do?
Yeah, I think I was young for my grade, and I was always young at everything I did, I feel like, compared to most of my peers. But I think I would have graduated last year, I believe, last spring.
And what would you have went to school for? Like, what was your main thing that you were going to school for?
I was studying business management, which, is everything in the business world, a little bit of everything. And I liked it. I definitely took away some things in the first year. I was going through that path, but I definitely would have learned more actually doing things than what I learned in school.
So business management would have been a 4-year degree?
Yep.
So did you ever, when you were in school or even before you started going to school, did you ever look at like a 4-year degree in business management? You're done with school, maybe a year or two out. What would you be making in the normal world?
And I probably would be making somewhere around 70 grand, if I had to guess.
So maybe 70 grand, 70, 80, rounded up to 100. You get yourself a good job because your dad knows a couple people. Okay, so you're making 100 grand. Did you make more or less than 100 grand last year?
More.
How about the year before?
More.
And how about this coming year? You think you're going to make more?
Double than last year. Yeah.
Yeah. Now, I'm not saying, this is the right path for everybody, but the path you chose, is not the traditional path, but it's also a path that has allowed you, and I know what you make, but to basically, if you just go with what you were saying, 70 grand, you've almost 4x that? I mean, look at, like, most people that go the traditional path, they got to work that corporate ladder. They got to climb that corporate ladder and put in time and heart and energy. Yeah. And right now, a lot of people switch jobs. And when you switch a job, sometimes it's a move up, sometimes it's a move down. I mean, just, I commend you for doing that hard leap because it's against the grain. And, I'm sure your peers would have probably gone against that, but you saw something and you went for it. And that's awesome. It's kind of like when you're out in the water and you see that big set rolling in. There's some people that just, they're paddling out, because they want to get over before it breaks on them. And then there's other people looking at it like, where can I get in and how deep can I get into this thing? And that's you. You're just going for it.
And it wasn't always like that. I mean, it's been a roller coaster because I think the first couple of years I was out doing this, it's like, well, I would talk to my friends who were up at school. They'd come down for the weekend and hang out and hear what they were doing. And they were getting their finance degree. They have this internship coming up next summer. They have a good job. They already planned out where they're going. And they're going to go, be some advisor in New York City. And they have this great big plan. And it seems amazing. And in my head, I'm like, well, I mean, I know I'm crushing it, but that sounds like something you could easily fall back on. You're stable forever. You're set. And so there was definitely some points where I was like, well, a little insecure of like, is my path really the best way to go? It's hard. It's a lot of work. And other people seem like they have an amazing track history of where they're going to go. And yeah, it's a couple of years down the line compared to where I'm at, but that's some stability they're going to get. And so I definitely had those doubts, but now I look back at it and there's no way I would have done anything any other way. Today, where I'm at now, I can tell, I'm where all of my friends want to be. And it's just because I left and I did it. I tried to figure it out. I lived in real life and not in a textbook.
Yeah. And I think one of the things that I think all the listeners, especially if you're younger folks, if you're listening to this, I mean, what Carson did, just so you all know, in the beginning is very hard, like very hard. I mean, he would have had to have struggled. And again, I wasn't close enough to see the struggle of it, and I know your dad just always, says you're just doing great. I'm going to talk a little bit about your dad in a moment, but, it wasn't an easy thing for him to do, folks. Like in the beginning, he had to work really hard, and not that he doesn't work hard now, but he had to work really hard in a completely unknown world of like, I don't know what I'm getting paid next month. I don't know what I'm going to get paid in 3 months from now. It's not the path where most people come out of college, you go to the intern, you got a job, and like your paycheck's coming in until you get fired or leave the job, right? That's it. Like that wasn't Carson's path. His path was a complete unknown of what he, in the beginning, he had no idea what that check was going to look like until he started building it. Okay. It's just like anything else. He had to build this empire. He had to create it from scratch. He literally did. And I think that's just something that's hard for some people to swallow. But I mean, it's been what now? 3 years you've been doing this?
Yeah,
About 3 years he's been doing this, and he's doing what his friends only could dream of doing. Like he's got time freedom now. He's got the ability to go, like he's at a point where financially he's stable enough where like he doesn't worry about how his rent's going to get paid, his mortgage is going to get paid. Yeah, mortgage, I should have said, but how your mortgage is going to get paid, how your car payments are going to get paid. He all that stuff's set. He's investing money. He's got right now about 7 million in real estate transactions under his belt. Sorry, like if you're working a traditional 9-to-5 or a corporate job out of college, like you don't have time to build up a $7 million real estate business and do that. You wouldn't have the freedom to do it. You might not even have the resources to do it, but you did. And not only that, you're a partner in a private fund, which is, I don't know anyone your age at 22 that's a partner in a private Reg D fund, that I can't remember what raise, we'll call that relatively small fund, but still in the millions. I mean, these are just things that you have. And plus you got 2,500 clients, now that you've worked with over $10 million in premium deposits. And some of the audience right now still doesn't know what we mean when we say premium deposits, but we're going to back into that in a second. And all because he decided to go the path less followed. Like sometimes I don't understand why more people just don't want to like go to the unknown. I really don't. I mean, I did. So like me and you, Carson, we think the same because I started off at 16 years old. I tried getting the regular job, but I had a terrible first job at a restaurant. I worked in a farm, but I don't call that a job. That's what I did in the summers. But then I worked at this restaurant. I was treated so badly that I quit. And it was really hard for me to do because I had to tell mom I quit, but I didn't quit with no plan. I quit with the plan of opening my first company, Fat Clothing. And then from there, it was just being an entrepreneur until .com crash happened. And then I had to get a job, and that landed me in Wall Street. So my path was very similar, where I went the path least, traveled, but I had so much resistance. I didn't really have a family that supported that. My mom did, but nobody else did. So it was just hard. And all my friends, just doubted it. All the teachers and college professors, with the exception of a few, doubted it, like, oh, that's risky. Oh, why are you doing that? But then all of a sudden you look back and then they're saying, oh, wow, I wish I would have done what you did. Oh my God, you're so successful. Oh, wow. You look at you. And that's where you're at now. You just did it in a lot less time than I did.
Yeah. I feel like everything was just boom, 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 boom. And not to mention too, I'm 22 years old and married. That's not something you hear as well. Living in Southern California, and I believe the highest median annual income zip code there is.
Oh, absolutely.
So, I mean, things just move very quickly. But that's how I feel like I am. I'm very quick with things. I'm very hardworking, and I'll make it happen. And it sounds like that was the same for you and your journey. I wish I knew you when you were in your early 20s figuring everything out, but it's same type of story.
Yeah. I just, I look back on those days and, a lot of it was like a dream, almost like too good to be true. Pro snowboarder, running skateboard, snowboard shops, but I wasn't making hardly any money. I mean, I was living, in a bedroom at my buddy's house where we had skateboard ramps in the unused part of the barn, and we shot guns out back and blew shit up. And, we just had a lot of fun. So folks, like, listen, if you're listening to this and you're young,
awesome.
like I'm 47 now, but like my path, like that I went is a pretty cool story. Like I lived, and, skateboarding and snowboarding is the reason for that. So, let's switch gears a little bit. When you started doing this, it was the unknown, but a lot of your friends kind of went the traditional path. So here you are, you're helping people build wealth, take back control of their money, and teaching them how to be the bank. So I think we should start there with some of the folks watching, and hopefully we get a younger audience watching this episode. So if you're young, you're going to want to pay attention to this next part, folks, because this is how you're going to set yourself up for the rest of your life. I don't mean set yourself up for the next decade, set yourself up for next week. Set yourself up so that your family, your kids are all set up because of what you do today. But the one thing that is not equal here is if any of you are young, like Carson, 20 in your 20s, we'll just say you're even in your 30s. We'll go up to the 30s.
Yep.
You have a unique opportunity that very few people will ever have. And that opportunity is just simply listening to what's going to happen next here with what Carson's going to talk to you about. Because if you just do this, everything else, for when everybody else is struggling, when everybody else is bitching and moaning because they went the traditional path and they didn't start early because they were too busy partying and blowing money and just living for the moment. Oh, it'll be fine. Mommy and daddy will be there. No, they won't. Unfortunately, there's this thing called mortality, and that means we all die eventually. So someday it's just going to be you. And Carson, what would you say to the young folks out there that are listening to this on what they should be doing now so that they don't have to do it later?
So it all comes down to what you value and how you spend your time. And we live in a world where instant gratification is everything. You get everything as fast as possible, and everything gets quicker. But that's not how money works. Money takes time to grow. Money takes time to build up. You can't get rich quick. It's most of the time it's a scheme. It takes time for things to build. And so what we talk here about all the time is infinite banking. And that's a concept of using time and consistency in your favor to build wealth. It's not something that gets you rich quickly. It's a foundation to build your wealth. And so those of you who are young like me, we need to get our heads out of the gutter thinking we can get all these things right now and be wealthy today. I'm sure some of you, it could work out, but we need to build a real foundation. And there's nothing better to do that than using the concept of IBC, which stands for infinite banking concept. And infinite banking is all about really looking at where your money goes when you create value in the world. When you work, you have money that comes in. Where does that usually go? It goes to someone else's control, someone else's bank, Wall Street, government, wherever it is. And we're not saving more money. We're not keeping more for ourselves. I know it's a simple answer, save more and you'll build wealth, but it's true. We don't save money. The average American saves 5 to 10% of their income. That's pathetic. In today's world of inflation and volatility, it's not going to work. And so to find a way to not to think long term, to save more money, and then putting that saved money in the right places, that's really how you can build generational wealth, and not just set yourself up for today, next week, or the month, but long term. And so what we mean by this idea of where we're storing our money is, we're really looking at a middle account of where your money flows through. And we use life insurance to do that. And those of you who are young, I talk to a lot of young people about life insurance. It doesn't make a lot of sense because they don't understand life insurance in general. But there's a certain type of insurance policy you can use to warehouse and store your money. And we can dive into all the nuances of what this is if we want to. Or if you viewers end up wanting to learn more about that, we can talk about it. But in general, it's just using this life insurance policy as a place we run our money through, a place you put your money first before you ever go and make investments, before you ever go and pay off debts or purchase things for your family. It goes through this place first, which is your bank. And so when you set up a policy right and correctly to do this, it becomes a valuable asset to store money, so that when you look 10, 20, 50 years down the line, using this insurance policy as the foundation versus a high yield savings account, for example, or 401k, it's going to create many benefits on your dollar, and it's going to create a massive benefit long term. And so what we talk about with infinite banking is just looking at really where your money flows, being more efficient with it, and then using this insurance policy as the foundation. And so we talk a lot about this concept, and we can dive deeper into it, but that's what I've been doing. I've been running my income into these policies, these specially designed policies, treating it as the foundation. And then I use these policies to go buy rental properties and go flip a house. Now my money's working for me in 2 places at once. I'm protected in case something happens to me. And now this is a very strong foundation. If my market crashes tomorrow, my money's not gone. I don't have to go beg the government for my money back. It is safe, it's available, and I can continue to go buy real estate with it if that's my choice of investment at the time.
It's a good thing your money is safe, because today the markets fell, well, depending on what you were invested in, but a lot of people are in tech. That NASDAQ dropped 3% today, and overall S&P is down 600 points in one day. So that's going to sting. Some people are going to be complaining about the losses they suffered from that. And if it keeps sliding, woohoo, that just means opportunity for us. But your real estate business lives and dies by the network and the connections that you make. I mean, after all, your network, well, it's your net worth. That's what you always heard, right? If that's an area where you desire improvement, well, Private Money Club, it's for you. PMC saves you precious time and money by bringing the real estate world, well, right to you, right in the palm of your hand. So get in on the action, like so many others have, by going to privatemoneyclub.com and sign up. Let's hit on a couple of the points you brought up, because some of those are really good. But when I think back to when I was in my 20s, and I'm really just thinking about what I did. I remember when I was in my 20s, I was a big Audi guy. There was a pro snowboarder who was a big Audi fanatic, and I got super caught up in him. And I remember right around probably your age, maybe a year or two younger, I had a 90 series 20 valve. It was an Audi, and the car was like just so awesome at that time. It was like my first, I wouldn't call it a sports car, but like fast car that I could like go rip. And the way I bought that car is I paid cash for it. So let's just talk a little bit about different ways you can buy a car. You can lease a car, which a lot of kids do. You can finance a car through the bank, and a lot of parents co-sign on financing for their kids. I mean, that happens pretty regularly. You can pay cash for a car like I did, or you could steal the car. I guess that's always an option. But like if I paid cash for that car, and I can't remember, it was like $6,000 or something, which was a lot of money to me back then. That $6,000 that I paid for that car, that is $6,000 that never again in my life can work for me. It can never earn for me. It can never go out there and make more money for me. It's just sitting in this car, which I loved that car, and I ended up selling that car. I ended up losing a little bit of money. So that's the cost of buying a car, right? But if you finance a car or lease a car, you're just making monthly payments for a vehicle, principal and interest, and you're giving all that interest to the bank, which again, those monthly payments can never work for you. Plus you got a car that just appreciates in value. So those are the traditional ways. But now at your age, you know that if you can just put off and delay gratification of getting that nice car today, and I'm going a couple of years back when you first started this, you delay that nice car, you create your banking system, make deposits into your banking, which is what you were just talking about. And then when you find the car you want, you pay cash for it, but you take a loan from your bank. You take a loan from the policy and you buy the car. Now you've got the car, but because it's your bank and you took a loan from your bank, you got to be an honest banker. So you pay your bank back the monthly payments. So the same monthly payments you would have made to lease a car or finance a car, you decide, you're the bank, you set the terms. You decide how much you want to pay your bank back per month. And you do that. You make monthly payments back. But now just because you bought the car by changing one thing, and that's where your savings went first to pay for that car. And then you were an honest banker and you made payments back to your bank, although you set the terms, so they could have been anything. Every single car you ever buy that way, you get all the money back for the cars, every car. And actually, the more cars you buy doing it that way, you actually end up making money on the cars. Now, a lot of times when I'm saying this, people are like, well, how did I make money on the car? How did I get all the money back? When I sold it, was the car worth more? No, you never sold the car. You were the bank. So you flipped the role. You didn't make payments to somebody else's bank so that they got all the money for the car. You made payments to your bank. So of course you get all the money for the car, plus all the interest, plus your money never stopped working for you. So you didn't lose any future opportunity on that money earning for you, like you would have the way I bought the car with cash. So when we talk about this, Carson, when I think back to that young age, like I would have probably never listened to somebody like you telling me how to build wealth and do all these things. But if you said to me, Chris, that's a beautiful Audi, down the line, do you think your next car will be an Audi? And of course, back then I would have been like, of course it will be. I want an S4. That was the car I always wanted. And then you said to me, well, hey, would you be interested in me showing you how to buy that S4, but how to get all the money back for the S4? And all you got to do is change one thing. That's, dude, I would have been putty in your hand. I would have been like, yeah, of course. And I would have listened to every word you said. See, it's not the life insurance that people want. It's not all the other things. It's the result. They want all the money back for the car. And then you're in real estate. So now, like in real estate, where most people that get into real estate, they're making money one time. They take their money that they save, they invest it into the real estate. They get the rental income, the flip income, whatever. Okay. However, you're going to get into real estate. You make money one time, but imagine nothing changes except for where the money goes first, where your savings goes first. And now you make money twice on every transaction. You make the profit or the rental or the wholesale, but you also make the money on your money earning for you. Like when I was in real estate, actually, when I got into real estate, luckily, when I was flipping, I met your father. And I remember I was at a convention in Las Vegas, me and my wife sitting in the front row, and Greg and Mike got on stage. And Greg, I remember in his talk, he said, the ultimate in real estate is being the bank. I had no idea what he meant, but I sure do today. And that has been a pursuit. Like I just wanted to chase that dream of being the bank. And I think if I could just take that wisdom and pass it down to someone like you, like I have, and teach you what this is, and then you go out and you teach your peers, other 20-year-olds, 30-year-olds, heck, even I know we've got a couple clients you brought in that are 18, 19 years old. Like if they stick with it, I know what that's going to mean. By the time they're my age, which 47, I'm not old, but I'm not young. By the time they're my age, dude, they'd have twice what I have. And it's just crazy. They would have had to save no extra money, but their money would have been working for them for a longer period of time. So just by the sheer aspect of time and money working, money compounding is a better word for it, they'd have double what I do. It's crazy.
I like your example of buying the Audi S4, because if you were to spend $6,000 on that car, or not the S4, the previous Audi you bought, $6,000 on that car, we talked about you not being able to ever earn on that money again. But people don't realize how important that is, especially younger people. It's like compound interest is huge. $6,000 compounded at 5%. If you buy it at 20 years old, when you're 65, that could be $100,000 or more. And so that's the money you're missing out on by just spending the cash. And that's the short-term mindset young people have. They need to get away from and look long-term and start just saving more money, financing it themselves, and long-term, it'll be phenomenal for them. Imagine $100,000 extra by not buying the car today, but in a few years. And then think about that same math on every single transaction you do. I'm assuming you found some numbers.
Yeah, I just put in $6,000 and I figured, all right, so back then I was 20. So today would be 27 years from that time. Okay. And I just put in a 6% annual rate of return, which these policies, because of the compounding, do far better than that. So that $6,000 would be worth $28,997, just as a modest 6% return. But if I were to take that, and let's just say, because remember, that's just putting the money in the policy and leaving it sit. But now, see, that's not the way it works, because we never leave the money in the policy. Let's say I would have taken that $6,000 out and I would have then, I don't know, earned an additional 10% on that money, which would be pretty easy knowing the things we do today with real estate. So let's just say now I'm making 16% on the same dollar. Now I'm not taking more risk. I'm just making 6 out of the whole from the policy. And then I'm taking and making another 10 out there. So I'm making 16%. How much do you think that is, Carson, over the same amount of time, but now I went from 6% to 16% compounded yearly.
I'm going to go closer to 100,000.
$330,339.80.
That's it.
Any questions, folks?
That's the math, guys.
Go to bankrate.com.
I
I just went to Google. I punched in compound interest calculator, bankrate.com, and I just plugged numbers in. I didn't manipulate anything. It's simple. And listen, you can look at anything. 16's out of, that's not realistic. Okay, how about 10? How about 12? Like keep putting the numbers in, and whatever your desire
doesn't
is,
matter.
Go make it happen. But it's so much easier to hit numbers like what I just said when you're making money twice on the same dollar. And there's only one way to do that. There's only one way. The Rockefellers knew this. The Morgans and Stanleys knew this. The Rothschilds knew this. They all knew how to make money twice on the same dollar. And that was because they all understood how whole life worked as a banking system. That's what they understood. I mean, it's been written about in so many books up to this point. It just surprises me that more people don't know about this. And the biggest thing that I literally hope you can do at a massive scale is to teach young folks how this works, because I know it's hard to give things up today. It's hard to delay those instant gratifications. You want that BMW, you're like, oh, I should just do it through my bank, but I want it now, and I can lease it for $800 a month, and I think I can afford that. I got to work a couple extra weekends. I got to do this. First thing I would tell anyone your age, and you know this, so I'm just going to tell them, time is the most valuable resource you have. So when you start trading your time to have these material items, which will be gone in 5 years, you won't even remember it when you're older. You'll be like, what was that BMW I had? God, back then it was the coolest car ever, but I don't even remember it. But that $800 a month for that payment required you to work a weekend, okay, 1 day a weekend extra just to be able to make that car payment, because you had to stretch to do it. That weekend, you'll never get that time back. You will never get that time back. So you spend it working, trading hours for dollars to have a material fantasy, whatever you want to call it.
Yep.
When you could have been out making memories, being with loved ones, going out and vacationing. It's just such a different path.
And that's what I think it's hard for young people, because there's that push and pull. And I have it too. It's like, I want to work really hard. I want to be growing a business. I want to be out there making money and saving my money. But at the same time, I'm young. Let's go travel. Let's go experience everything. I don't want to miss out on my life either. So there's both of those different avenues you want to go down. And so having that foundation first and then going out and doing whatever you want is amazing. I think you can have best of both worlds all day long if you just plan it out. If you just think about how you want to do these things and budget things out, you can do everything you want to do. Even if you are young and you don't want to spend everything working, but you want to go and have fun, great, do it. But start with the foundation. Banking, like Nelson Nash talks about, is a business everyone is going to be in, whether you like it or not. And so might as well learn it, might as well understand it, might as well excel at it. So the rest of your life, you can go do everything you want to do.
Absolutely. I was at my mom's house the other day, and, sad to say, I don't go there enough, but that's the house I grew up in. And I remember, God, I don't know how long ago it was. Feels like it was yesterday, but there was these little seedlings that she planted along. She's got this little laneway that goes out to her barn, and she got these little seedlings she planted. And she called me over there yesterday. She needed help cutting down some trees out back. And I'm walking through the backyard where the laneway is, and I'm like, wow, these trees are huge. And they were just these giant, they're still newer trees, but they were giant, probably 50 feet tall. And I'm just like, has that much time passed? The reason I'm talking about a tree is not to get you to envision that, but just to help you all understand, like, time goes by really fast. And just like that tree growing from that little seedling up to this 50-foot tall tree, which blew my mind, like, your money is no different. If you plant the seed early, and you tend to the seed early. You see those little seedlings, when she first planted them, she had the strings attached, the little stakes in the ground to make sure they grew straight. So she had to tend to them, make sure they're watered when you first put them in. A seed or a tree or anything that you plant in the ground has to be tended to early on, but then eventually you just let it go. And you never need to even do anything with it. Maybe prune it every once in a while, but then all of a sudden it provides shade, provides homes for lots of animals. Like, your money is exactly the same. At first, it seems so hard to make, so hard to save. So, all these things come into play, and you're like, oh, I don't know. I should do this. I should do that. But if you just do that one thing, you just plant the seed and tend to it, And then after that, let compounding interest do the rest. Your numbers will look just like that calculator did. And folks, like the thing I didn't show you is like, if I had just added 5 years to that, I bet you it'd be 600,000. And then another 5 years, it'd be over $1 million. See, the thing people don't understand, especially when I didn't know this at a young age, is the power of compounding interest. Like you do nothing at all. You don't have to work any harder. It's your money working for you. And that's, I think, the one thing I know you do a really good job about is you teach like folks that the power of compounding interest is just single-handedly. I mean, Albert Einstein called it the eighth wonder of the world. It's just an unmatched power in finance.
Yeah. And that's again, also why I like real estate. Real estate has what I like to call the 4 pillars of investing. You get appreciation from the asset, you get depreciation on your taxes, you get rental cash flow, and you get to leverage it with the bank. And so now you get all these different benefits on the investment compared to just putting it in a stock market and only getting one of those pillars, only getting appreciation. And so the longer you give compound interest, the more you give time to grow, and you buy assets that provide cash flow like that, it just compounds itself altogether. It's if it were me and I was going to advise any 20-year-old what they're looking to do with their money, or even 30-year-old, I would say save up your money, put it in the right asset, which is this policy, and then go buy a rental property. Passive rental property, turnkey, don't get in all the other business stuff. Just buy a rental property and see how it works. See how your policy grows. See how everything plays out, and you're going to be thanking me later. And then you'll be buying more, adding more policies. And then you might be getting into the entrepreneurial space or starting your own business, and it just builds off of that. I think a lot of young people today have very creative minds, actually. I think people are really smart, and they need to be using their talents. And they will all want to create amazing things, and that's awesome. But there needs to be an avenue to do that. And I think too many people today think they're told you can't succeed. You know, the business or the government's not set for you to do this. Here's the path you're going to follow your whole life. And people are starting to understand that's not how I want to live my life. People are understanding, hey, I have my own traits and talents, and I want to get into what I want to get into, and not, whatever mold I'm supposed to be in. I don't want to be in that. And so I think this energy we have as young people is amazing. We need to capsule it and put it in the right places and the right directions, and everyone will succeed.
Well, I think the other thing too that I want to make sure we get out in this podcast is it doesn't take a lot of money. I know when a lot of people look at this, they look at investing, they're like, oh, I don't have enough to save. Like, of course you do. Like $50, like save $50, save $100. I mean, what amount are you saving? What amount could you save if you decided that you took $100 from each paycheck and you put it somewhere where you just didn't see it every day? Would that cut into your lifestyle? Would you not be able to go out and have a good time with your friends? Okay, well, if that does, could you do $50 a paycheck? Whatever your number is, that's the amount you save. So a little amount when you're young will grow to a monstrous amount when you're old.
Yeah.
Okay. But it doesn't, but the beauty is like, no one wants to wait till they're old to be like, oh, I don't want to wait 20, 30 years to use this money. Great. You can use it next year. You can use it in 30 days from now. You can use it anytime you want. It will always be available in liquid, but don't not start now because you're like, oh, I just can't afford to do that. That's a mindset problem. That's all that is. And Carson, you talk a lot about mindset because that's, I think, the biggest thing holding back young folks from getting started the right path and building their foundation is their mindset.
Yeah. People always say, if you're confused, you're not going to do it. And so I think there is some confusion as well because young people aren't taught about money. They're not taught how money works, not taught how taxes work, not taught about real estate. And so learning about something like this, like life insurance as a bank, makes absolutely no sense. It's confusing. I don't want to spend my time worrying about it. It's fine. But if we can bring the awareness around what we're trying to teach of the importance of banking, and we can actually understand life insurance, I mean, it's over for people. People don't understand life insurance, and that's the problem. But we need to, as young people, start learning of these things. And if you do understand life insurance, you do build a policy, like you just said, long term, it's going to be monstrous for you, and it'll still be liquid when you need it. So might as well. And everyone can save money. I don't care how much money you make. stop going to Starbucks every morning and you can save money. Like it's that simple. And so there is a need for wanting money or wanting things now, but you can postpone them and sacrifice those little things and save way more money for yourself.
Couldn't agree more. I think that's a big thing, that I see is, they always, and it's not, listen, I got no issues with Starbucks, but like, I'm just a coffee guy, right? I drink coffee with soy milk from Starbucks. So like, but then I just recently, like Brandon in our office here, Brandon, he gets these fancy, I don't know, I call them foo drinks, but just fancy drinks. and every once in a while I'll be like, hey, do you want anything from Starbucks? Give me the list of, like, I call it a list. It's a drink, but it's got lots of syllables in it. And then I order it over there and I get the bill. I'm like, no, it's just these 2 drinks. Like this must be somebody else's. They're like, no, that drink was $8. And I'm like, $8 for that? Like, what? But I mean, it's just like, I think, when I was at the fair this weekend, and you see a lot of people carrying around like Starbucks and they got these giant fancy foo drinks. And I'm like, there's 10, that's $8, that's $7. And it's just like, holy crap. Like, is the drink that good? If they would just postpone that and then just save a little bit of that. Now I know that's a hard thing to say because, like, listen, we all enjoy our coffee and our foo drinks, but I don't know. It's just a mindset problem. It's like, well, you can spend today and have to deal with the problem later, or you can save today and not have to deal with anything later because you'll just be able to pay people to do the things you don't like to do.
Yeah, and everyone who's at my stage of life doesn't fully get it. I don't know why. I mean, what would you tell someone who's 25 how to understand like the importance of not instant gratification but delayed gratification? How do you teach that?
I wouldn't. I would find out what it is that they like. Like I know back then, it was Audis for me. That was like my big thing. Like I just wanted a S4. That was my thing. So I'd find out what the 20-year-old, like what drives them. What are they passionate about? Great. And then I would find an angle to say, well, have you ever thought about if you could do it this way? And I don't know what it is, but like I'll just use the car example. Have you ever thought about if you could get that car, but you didn't end up having to spend anything on it? You got all the money back. Like, would you like to learn how to do that? Like that, then you've got them. And that's how I would do it. I was never focused on what it is that we do. I would focus on the why. Like, here's what it is. It's a specially designed whole life, but this is why we do this, and just explain the why. And then they'll always ask what and how.
And I'm
not going to say that's going to work, but that would be
yeah, no, you're right. And I've started to see it because I started posting on social media. I started to speak at little things, and just after 3 months of just being talkative and providing awareness around the concept, everyone talks about it with me. Before then, I was doing this for 2.5 years or something before that. Anyone ever asked about my job, I kind of explained the situation, but that's it. No real questions, no interest. But I started teaching about it online and being public with it. And I swear, every single conversation I have now, someone asks, hey, what are you posting? What's this IBC thing? What's life insurance? Like, what are you teaching? And they'll actually sit down and listen. And I've been talking about IBC with all of my peers lately, and even peers' parents and other people around me in my community. My old 8th grade basketball coach saw my post last week and texted me and said, hey, I don't know if this is still your number, but I see your post about financial stuff. I want to help myself get ready for my retirement. Can you help me? And it's just like, no way. Like, people are starting to see what I'm talking about, and it's starting to be apparent for young people that there's other ways to use money, other ways to save money that we're not taught. And I love seeing it at this point, and I hope to keep seeing it and growing that idea. But I'm getting a lot of good feedback from it so far, and I'm stoked about it because I have 2 or 3 of my friends now setting up their own policies, and it's like $1,000 a month for you. Good job, my man. Like $500 a month for you. Well, like, awesome. Like, that's exactly what you should be doing. Even though you talk to your parents and they think, they don't understand it yet, like, good for you for going against the grain and doing it, because you're going to see the benefits of it. I promise you. It's so fun to see.
That is such a rewarding thing, man. That is such a rewarding thing. When you keep doing the hard work, you keep giving and giving and giving, and then people start noticing, and then you help a couple of your friends out, and then they come and they're like, man, this is amazing. It's kind of funny. It brings, just in you saying that, I'm sitting here thinking, and I'm like, back in the 30s, 40s, 50s, and even the 60s, like, whole life insurance, it was sexy. Like it was just the thing to have. Like everybody back, especially like 40s and 50s, like everybody had whole life insurance. It was just what you did. You didn't even think about it. It wasn't like you were like, oh, Dave Ramsey said that whole life stuff is a scam. No, it was just everybody was on board. And it wasn't until the late 70s, early 80s with Nader coming out trying to say it wasn't transparent and then introducing ULs that whole life took a left hook to the eye and got a black eye on that. And that has carried through. But I'm telling you, we're seeing the turn. Whole life is becoming sexy again. Maybe not off the shelf whole life, but specially designed whole life is definitely becoming sexy. And this next like cycle that we're about to go through, whether it's a deep recession, or maybe the next Great Depression, God hope it's not that, but whatever it is, I think that is going to be the catapult that's going to bump whole life back up because, it's the one asset class, the one thing that people can buy that is guaranteed that you'll have more money or more money tomorrow than you did today and more money next year than you did this year, no matter what happens. And I don't know of anything else you can say that about.
And that's why banks own so much life insurance. Like even though you might not enjoy how banks are operating, how the Federal Reserve operates, they're doing this too. That right now between just Wells Fargo, Chase, US Bank, there's over $60 billion in whole life insurance. I was actually at the bank last week and I was in my Wells Fargo talking with an agent in there. And I was talking about what I did. And he said, oh yeah, I think I have a whole life policy that the company has for me. And I'm like, oh, of course they do. Now you're starting to see what they're doing, right? So if that's where the wealthy people are doing, the large corporations are doing, why aren't we taught this? Why isn't this something we're taught in school? Why isn't this something we're taught in the finance degree program? Like if everyone else is doing it, why aren't we? And it's because in the financial industry, these aren't the most profitable products. I could sell a 401k all day long in a mutual fund and term insurance, and banks are going to make so much money off those products and the consumer won't. It's not like these financial advisors you talk to are bad people. They just don't know what's going on. And you experienced that too. I mean, you were in the industry, in Wall Street, in New York City. I mean, you've seen it firsthand. I wish I have experienced that. I haven't. But what was that like?
It was wild, man. It was, I was just looking back, I was just a young kid, man. I remember the first time I went there, 51 Madison, which is where home office was. And I remember I got on the plane, I had my best suit, and I flew there. I'm all sweaty after I got off the plane because I didn't realize you don't wear the suit jacket on the plane. And then you got on, and then the cabs and the subways and everything. I finally get to 51 Madison. I probably smelled pretty awful, but I walk in those front doors and I was just like, this is nuts. Everybody, like, just so much commotion, so many people moving. And we went up, and this is when I was first like getting into their RIA. So they had just launched an RIA, registered investment advisory. And I was like one of the young bucks that was coming into work for the RIA. And I got introduced to all the big wigs and the traders. And dude, I felt like I was on the top of the world. I felt like literally like I was just going to be okay. And then the Great Recession hit, and realized, a lot of people weren't going to be okay. Most of the people that I had met back then, prior to the Great Recession, they no longer were employed. Those people were out of work, period. Like it was just so that feeling was amazing. But when I saw the reality and what happened after the Great Recession, and that's the one thing I can say, I'm old enough now where I've lived through several recessions that I physically remember, but not just remember, that impacted my businesses and myself. One while I was a self-employed individual, and one while I was, a Wall Street advisor. And then obviously the most current one that we did, which whatever. Yeah. But so I've seen it on both sides, and I've seen the chaos and just what a train wreck that world that I thought was untouchable was after that recession. And we'll see the same thing again. So I like now just being in the boring old world of whole life insurance because I don't need to deal with that stuff anymore. Yeah. But it was,
do you know who John? Oh, I imagine it. I wish I was there with you. Do you know who John Bogle is?
I know the name. Why do I know that name?
He wrote a book about the financial industry. He is the owner and founder of Vanguard.
Oh, yeah. Yep. That's why I knew the name.
I was researching recently about him in the financial industry. I'm actually going to talk about this in Nashville, but he came out with an interview right before he passed away in 2006, I think. He talked about the financial industry in all honesty. And he used two words to describe it from his perspective, being the owner of Vanguard. Understand, there's $11 trillion around America in 401ks. Vanguard holds about 2 trillion of it. They have a good chunk of it. And John Bogle led that. And he said, with two words, he described his industry as robbery and tyranny.
I remember that. Yeah.
Powerful stuff. Like, he was in that industry. He gave a couple examples of the effect that fees play on your 401ks. He showed if you deposited, whatever amount in your 401k, you might think, yeah, I got a match. I'm going to be, whatever set. He showed the math that, hey, no, our company, Vanguard, we're going to make 80% of the profits. You're going to make 20% of the profits. And you're going to take 100% of the risk. We're going to take 0% of the risk.
Exactly.
That's it. And it blew my mind. I'm like, he's speaking truthfully what his market did. Why isn't this taught to everybody? Like, that's it. And that's the point and the theme of our meeting today is like younger people need to understand these things. Understand that, if anything. That industry, it's crazy. When I learned that stat, it blew my mind.
But it's also the industry that is very notorious for robbery and what was the site? Tyranny and robbery?
Robbery and tyranny.
Tyranny, yeah. Well, here's the thing that industry does a really good job of is attracting people that want to get rich quick because it's a gambler mentality. It's like, oh, well, you could get rich quick and the stock could go from 10 to 100 and you'd be rich and this Bitcoin could go to the moon. It's going to be $1 million a coin or you could lose all your money. And guess what? The house wins almost every time. Yeah.
Go for it.
No, I was just thinking, I was just going to say, if you've ever been to Las Vegas, and I know you lived there, just the buildings and the hotels and the casino and the strip, it's magnificent to see. And then you got to sit back and you got to ask yourself, how did they afford all this? Well, just go inside and look at the tables and the slot machines and just understand that they're not building all this because you win. They're building all this because you lose, and they know the numbers.
Yeah. That's it. I mean, not to compare the financial industry to Vegas, but in some aspects it kind of is. I talked to
the mindset
a lot
of it is the same. The gambler mindset
for sure.
Is the same. That's more what I was trying to make reference to.
Yep. And that's 100% true. I talked to a lot of different financial advisors and insurance agents and CPAs being in this industry. And you'd be amazed. Well, I mean, you experienced it too, but the viewers would be amazed at what these people think and do. Someone said, I don't know who it was, but they called a financial advisor the glorified salesman. That they're just selling what was put in front of them. They don't know what it is. If you talk to a CPA about how to, why you should put money in a policy, they're going to say, how is that going to reduce your taxes? How is that going to get me paid? It's not. So they're not going to sell you those things. They're not going to teach you those things. They're going to file your taxes and they're going to help you pay the least amount of taxes with the 401k contribution or SEP IRA, whatever it is. They're not going to show you how to strategically build wealth. And so that's where I feel like we come in, and a lot of other people in our industry, it's like, hey, here's how you can strategically build wealth, including tax benefits, including buying, real estate or whatever investments you want to get into. But here's a good foundation to actually build something and be truthful about it.
Dude, I couldn't have said it any better. You nailed it. I mean, it's so simple, but yet people just make it so complicated. I always say, cost is only an issue in the absence of value. That refers to just about anything. I mean, the cost of anything really is only a problem when you don't understand the value. And I think there's a lot to be said about that with investing too. A lot of people fail to see the value. And they focus so much on the cost, but they don't understand the value, or they focus so much on the cost that they completely miss the value of everything. And because they're only focused on cost, they never get anywhere. they literally self-destruct because their mind is in the wrong place. They're focused on the penny and they're tripping over $10 bills, to pick up pennies. And I know it's the dime to pick up the penny, but like literally I had to make it even bigger. Like they're tripping over $10 bills and picking up pennies. It's a shame. It's a shame. And, I think we can only help those that want to. And Carson, you hear me say it all the time in the meetings, we must first know who our client is not, so we can understand who our client is. And that's a very important thing, because if you're always going after people that you can't help because they got a broken mindset, you're never going to be able to help the people that need and want your help.
Yeah.
So with that being said, Carson, how do people learn more about you and where do they find you?
So I am on social media everywhere. If you look up my name, Carson Herlean, you will find me on any social media page. I want to end by telling all of you, we've talked a little bit about some negative things in the financial industry and some things going on, but end with some positivity. There is so much opportunity out there everywhere around us in every city in the country. You can make money so many ways today. Think big, be ambitious, work hard, and you'll succeed. All these little things you talked about are great, but have positive outcomes, have a positive network around you, and you'll succeed. And so I think just having that hope in terms of your financial future is what a lot of people lack. And so let's end with that. There's opportunity around you. Let's have some positive relationships and behaviors, and you'll succeed, guys. So you can find me anywhere on social media. Again, my name is Carson Herlean. I'd love for you guys to follow me and follow my journey as I'm building my business, my wealth, my real estate portfolio, and teaching people about how to use and protect their money. So I'm grateful for you, Chris, for having me here today.
Oh man, it's been wonderful. And thank you so much for what you do every single day to build this and to really get the word out there about what being your own bank is all about. With that being said, folks, thanks for joining us for this episode, and we will see you on the next one. Oh, and by the way, why don't you give this one a like? Because you know what? I think it deserved it. Anyway, see you next time.